Welcome to the series Investment in the UK, your go-to podcast for everything you need to know about the UK's real estate market. Whether you're a first-time investor or an experienced one looking to expand, this podcast will guide you through the ins and outs of the property landscape in the United Kingdom. I'm your host, and in today's episode, we're diving into Lesson 1, Understanding the UK Real Estate Market. In this lesson, we'll explore some key trends, the current state of the market, challenges you might face, and different types of real estate in the UK. So let's get started. The UK has always been an attractive location for domestic and international investors, thanks to its political stability and the profitability of its property market. For years, UK property has been a steady asset. Property prices in areas like London have increased by up to 700% over the past 20 years. But what's even more intriguing is how the market has evolved. Historically, the UK has been a buying culture, home with people seeking to own homes. But recently, that trend has been shifting, particularly in major cities like London. Around one-third of Londoners now rent, compared to just 15% back in 2001. The demand for property continues to outstrip supply, which makes UK real estate appealing not just for capital appreciation, but also for reliable monthly rental returns. However, there have been significant changes in the tax regime in recent years, especially for overseas investors. It's important to know that the UK property tax system can be complex, and there are common pitfalls you'll want to avoid. Now let's dive into the section where we will understand how does buying and selling property work in the UK. The process is relatively straightforward, but does require attention to detail. Typically, sellers will engage an estate agent to market their property. Fees are usually a percentage of the final sale price, but some sellers negotiate fixed fees. Once an offer is verbally agreed upon, both the buyer and the seller appoint independent lawyers called conveyancers. Their role is to make sure everything is in order, from property searches to confirming that the seller can legally transfer ownership to the buyer. If you're buying, you'll also likely request a property survey to ensure the building is structurally sound and compliant with building regulations. Basic survey is often required for a mortgage, but we recommend opting for a more thorough inspection to avoid any surprises down the road. The transaction only becomes legally binding once both parties exchange contracts. At this stage, the buyer typically pays a 10% deposit and a completion date is set. Once the funds are transferred, the deal is done. Now, let's zoom out a bit and look at the bigger picture. The UK real estate market is diverse and consists of residential, commercial, and industrial properties. Each plays a vital role in driving the UK economy, offering opportunities for both buyers and sellers. The real estate market has been experiencing some high-profile changes lately, especially with home prices reaching record levels. But what does 2024 have in store? Analysts predict that despite challenges like rising interest rates and economic uncertainty, the UK property market shows signs of growth and stability. However, it's not all smooth sailing. As we approach 2024, the market faces a variety of challenges that could slow down its expansion. The UK real estate market is facing significant headwinds in 2024. One of the biggest challenges is the rise in interest rates, which has discouraged potential buyers from entering the market. In fact, new mortgage commitments in early 2023 saw a drop of more than 40% compared to the year before. Why is this happening? To protect themselves from potential losses, lenders have started removing mortgage products from the market, and the rates for home loans have increased dramatically. For example, the average 2-year fixed mortgage rate has more than doubled to around 5.75%. This is a tough pill to swallow for many potential home buyers. And it's not just the interest rates. A slowing economy is expected to impact housing prices. With rising home prices, stagnant wages, and increasing debt loads, affordability has become a huge issue. For many, the dream of homeownership is becoming out of reach. In fact, house prices in the UK have climbed from 5 to over 10 times average earnings since the late 2000s, and it's even worse in cities like London. With rising living costs and inflation, demand is starting to decrease, which may lead to a reduction in prices. So, what's the outlook for house prices in 2024? While sales and mortgage approvals have slowed down due to rising borrowing costs, there are still some encouraging signs. House builders are optimistic about 2024, and early trading updates suggest that things could pick up again. However, experts forecast that house prices could fall by around 10% over the next 2 years, primarily because of the reduced affordability caused by higher mortgage rates. But don't panic just yet, there's hope for a rebound. New estimates predict that house prices could rise by 4% by 2025, helped by lower mortgage rates. We'll have to wait and see how the rest of the year unfolds, but for now, things look promising if the current trend of affordability continues. Now let's understand about the rental market. Areas like prime central London, supply is expected to decline, which will push rental prices even higher. With fewer unintentional landlords, those who may sell off their properties, supply will remain tight, and demand will continue to rise, especially as more people are priced out of the sales market. This could mean continued pressure on renters, with fewer rental properties available, leading to higher rents across key locations. Now, let's break down the different types of real estate assets you can invest in. First, there's residential real estate, which includes single-family homes, condos, and townhouses, among others. This is the most common type of property for individual buyers and investors. Next, we have commercial real estate, which is used for business purposes. This includes everything from apartment complexes and office buildings to shopping centers and restaurants. If you're looking to invest in businesses, this might be your area. Industrial real estate covers properties used for manufacturing, storage, and research. If you're thinking about large-scale investment, this is another sector worth exploring. Then there's land, which includes undeveloped or agricultural properties like farms and orchards. And finally, special purpose real estate, which includes government buildings, schools, and places of worship, is another niche area to consider. So there you have it, an overview of the UK real estate market, from the latest trends to challenges ahead and the types of assets you can invest in. The market may be facing some hurdles in 2024, but it remains one of the most dynamic and resilient sectors in the world. Be sure to tune in for the next lesson, where we'll continue our journey into the complexities of real estate investment in the UK. Till then, stay informed, stay invested, and thanks for joining us. You've been listening to Investing in the UK. Catch us next time as we dive even deeper into the world of UK real estate.